Phil, thank you. Will, what's your trade with Delta?
Talked about it and nailed it. It's kind of a messy, disappointing earnings announcement. Guidance wasn't that great on soft Q4 profit and sales. It's down 5% pre-market. It got back to flat. It's down a little bit now. Listen, I love Delta. I live outside of Atlanta. I'm an exclusive customer of theirs. It's all I've ever flown. But airlines are very tough long-term investments. You just have to look at the 10-year chart of Delta. It's gone nowhere. We prefer investments with long-term value, stability, better pricing power, and more predictable growth. And Delta can't really have predictable growth with their antiquated technology that shuts them down every 4 or 5 years. So I'm a seller here looking for better investments.
All righty, we got next up, Advanced Micro Devices CEO Lisa Su announcing plans for several new AI processors and other chips at an event in San Francisco today. But the real news is that Christina Partsinevelos is back.
Christina,
welcome.
I'm back for only one day, though. I'm taking the full 6 months maternity leave. But let's talk about the news. Even if demand for NVIDIA's latest AI chips are, quote, insane. I know you guys heard this from Jensen Huang earlier this week, or crazy, as Foxconn's chairman said also earlier this week. AMD wants you to know there is room for them to compete. And CEO Lisa Su just finishing up her keynote in San Francisco, where I am today, announcing a new AI chip, the MI325X, which actually competes directly with NVIDIA's H200 chip, according to AMD, with availability as soon as this year. You can see it's the third chip on the screen if it's confusing to you on there. That means that right now AMD will have 2 AI chips in direct competition with NVIDIA. And that's a lot of the conversation, that it could be an alternative. Su also announcing the overall market for AI chips will go from $400 billion in 2027 to about $500 billion in 2028. So a big increase in just 1 year. The company also previewed their 5th generation CPU chip, which is really doing the general tasks on a computer. And they claim that they own about a third of the CPU market, which was once solely owned by Intel. So you can see how the competition has really ramped up between those two companies. Much of this news, though, was largely expected by the analyst community. If you read any of their notes, you saw them talking about this. Could be a reason why the stock is selling off, down 4%. Also, no new customers announced here today. And especially, you had this stock run up, double digits just over the last, since September 1st, neck and neck with NVIDIA. So you can maybe assume a lot of this news was already priced in. If you're wondering, how is AMD going to compete with NVIDIA? What's the cost structure for it? What about AI PCs? I'm hoping to get all answers to those questions with Lisa Su at 4 p.m. Eastern time only, or first on CNBC.
All right, Christina, great to see you. We'll see you next time. Will, your trade now on Advanced Micro.
Yeah, I like what Christina was saying. It's going to be a buy here. Advancing AI conference today. CEO Su said to look at the 5-year arc and how it fundamentally changes everything we do. I use AI daily on a basis daily. There's a lot of risk with it. With big price moves either direction, there's a lot of risk, but a lot of return. As she just talked about, AMD's taken a third of Intel's chip market, is now coming after NVIDIA. I think the market is aggressively looking for ways to invest in AI chips outside of NVIDIA. Even though it's up 16% year to date, AMD that is, NVIDIA is up 160. So you can diversify your risk a little bit away from NVIDIA here. But I will caution, just like NVIDIA, AMD is reliant upon production of chips from China. So any geopolitical tensions between U.S. and China could be a drag on performance here, which would be the only piece of caution I have to go with the buy rating I'd give it.
All righty. Thank you, Will.
Well, let's turn then to the big banks because they get set to report quarterly results. And we want to know how the Fed cut could affect their earnings, but also how the backup in rates since then might change the story. Leslie Picker is standing by with more. Hi, Leslie.
Hey, Kelly. Yeah, that's the number one question analysts have about the outlook. Rate cuts can be a headwind for banks' profitability in the near term because floating rate loans tend to reprice downward more quickly than rates paid out on deposits such as CDs. And that gap is expected for Q3, but most analysts are urging investors to focus on the medium-term trajectory, in part because of what you mentioned with regard to rates moving upward over the last week and a half or so. Morgan Stanley research said specific commentary on deposit pricing is likely to drive, quote, outsized reactions during earnings, driving higher bank stock volatility, so pay attention to that. But on the flip side, a lower recession likelihood coupled with cheaper financing should bode well for the M&A pipeline. And of course, the election a few weeks away, corporates will also get more regulatory clarity that may help C-suite confidence for doing bigger transactions. Even though estimates indicate a little choppiness in those 3Q reports, it appears the markets are already looking past that, with the financial sector hitting a record high yesterday, although slightly in the red, down about half a percentage point today. We'll get the first read on all of this tomorrow when JP Morgan and Wells Fargo report their earnings first thing in the morning.
All right, Leslie, thank you. Will, we asked you for a bank name you do like. You gave us PNC, which reports on Tuesday. The big regional often looked to as a barometer. We're showing the big banks there, but what would you do with both of these trades?
Thanks, Kelly. I'm really enjoying this super stock lunch with the lead-ins here because your team is nailing some of the thesis. We like regional banks, but this space also because PNC has an asset management business and capital markets. They've got a good long-term trend, stable earnings growth above average relative to sector yield and dividend growth, a strong balance sheet. And the reason that we like regional banks is they're not the big national banks that are about to report, and they're not the local banks. They're going to benefit from their loan base being more variable in nature. And as rates come down, that should perk up interest and lead to more activity for them. They've also seen strong fee income growth off the capital markets operations, which should help them meet their guidance. We'll find out next Tuesday to see how that's going to look. And they're also investing in their card business to increase penetration in the consumer business there as well. So we look for a very well-diversified regional bank that's got all the potential to continue to have stable earnings growth going forward, which we would be a buyer of here, and our team out of Overland Park, Kansas is a big fan of.